after U.S. officials softened rules that could have cut off tuition aid to the schools. Education Management, ticker EDMC, on the NASDAQ rose 23% to 2490, and Apollo Group, APOL, on the NASDAQ recently trading up 10% or so to 46.45. Economic data today, weekly jobless claims fell 6,000 to 422,000. It's a smaller drop than expected. The 4-week moving average dropped 14,000 to 425,500. Of course, the big data await investors tomorrow. We have the jobs report coming out. Expectations I've seen anywhere between 140,000 to 170,000 growth. Last month in April, the economy created 244,000. So let's see, where are we at in this market? When I was last on the air with you on Tuesday, headed into the close, we saw the NASDAQ strengthening. It was up 0.7%, 0.8%, then it rose to over 1%, and by the close, it ended with a 1.4% gain, and there was a big rush in trading volume late in the day, really over the last 30 minutes of trading. So the day's action on Tuesday amounted to what we had been looking for, a follow-through day. The percentage gain wasn't overly impressive at 1.4%. Again, we had a 1.4% gain back on March 24th that launched a little bit of a rally, but really not much. It lasted maybe, I don't know, 5-6 weeks, something like that. So after Tuesday's strong performance, what happens yesterday? Well, we get a wave of selling that hit the market, and really was an ugly day by all indications. We'll just take a look at the NASDAQ here. You can see a big percentage decline after Tuesday's strong gain. The NASDAQ actually recently broke above a descending trend line, which is a positive technical development. It's back above this trend line today, but really the market direction to me is not discernible right now. And when that is the case, I think it's still very important to just adopt an overall defensive posture in the market. It was my hope that the follow-through day on Tuesday was going to have some staying power. What's really unbelievable, really, is that I don't think anybody would be surprised as to what happens to the market tomorrow on this jobs number. I mean, Goldman Sachs was recently looking for 150,000 jobs tomorrow. They lowered that to 100,000. We had that very weak reading yesterday in the ADP National Employment Report that showed private payroll growth of, 35,000, 38, 39,000, something like that, well below expectations. But Goldman Sachs lowered their job growth number to 100,000. So a lot of people are expecting it's going to be a very sluggish number tomorrow. Now, the way this data are calculated, it wouldn't surprise me to see a big jobs number tomorrow, and nor would it surprise me to see the rally that looked like it was going to gain some traction on Tuesday begin or reignite tomorrow. So it's really anybody's guess. I mean, we could head lower. I mean, maybe the percentage declines that we saw Wednesday, they'll just be extended tomorrow. But if we do get a number in that 175, 200,000, even north of 200,000, who knows really how the market is going to react. But suffice to say, it was a bullish day for the market on Tuesday. It was a very bearish day on Wednesday. A lot of growth stocks that actually had decent looking charts reversed in very heavy volume. So there was nothing positive, in my opinion, about the what we saw in the market yesterday. So we'll wait and see. I just don't feel like I'm in a position where I can be making any big bets in individual stocks right now, especially in the aggressive growth universe. I think that these stocks particularly are vulnerable here. There's some large cap things working. We'll take a look at a few more stocks later in the show that are working as well. Other news today, we had the retailers come out with same-store sales results for May. Year over year, the growth wasn't too bad. I think the media generally treated the retail sales reports, saying that overall they weren't that good. There were a couple of winners. We can take a look at Saks, luxury department store or high-end retail store. Shares of Saks were recently trading. Let me get a price on Saks here. Up close to 2% to $11.27. Saks is interesting here on a weekly chart. You can see it recently came down to a longer-term support level of around $11.48. Stock seems to be very well supported in the $10.50, $10.75 area, but it was putting in a good day today. Shares up nearly 2% to $11.27. Same-store sales at Saks up 20% year over year. That was well above expectations, and in terms of growth, it was really the star of the day. The story in retail continues to be the higher end. We also had pretty good numbers from Nordstrom today. Same-store sales up 7.4%. Nordstrom is a much different looking chart than Saks, however. So we could pull up a chart of Nordstrom. Excuse me, and we'll see that Nordstrom not too bad. It's below its 10-week moving average, just like Saks, but good number at Nordstrom as well today. Same-store sales up 7.4%. Also wanted to take a look at Ross Stores. This is one of my favorite retailers. Really a stock that technically continues to look pretty strong. Same-store sales were up 4%. That was a little better than expected. The daily chart of Ross, you still see a chart that is showing exceptional strength in this market. Shares were down today 0.6% to 80.21, but still holding well above its 50-day moving average at 75.27. Ross is a stock that is probably going to base for a little while longer, but if this market finds its footing sooner rather than later, Ross could be a stock where you could see continued outperformance from this name. So Ross Stores having a good same-store sales number. Stock is under a little bit of pressure today, but still looking pretty darn good. Also take a look at TJX Companies. Came out with same-store sales only up 2%. The stock is down 1.1% today to 51.40. You can see a much different looking chart than Ross Stores. TJX has the Marshalls brand, and the stock fell below its 50-day moving average today. Again, recently trading around 51.40, up off its session low, actually trading near its session high, but still down 1.1%. And finally, we'll take a look at Costco, another very well-run company. Costco also had same-store sales today. Shares were down 1.25% to 79.21, coming right into its 50-day moving average here. Again, right now trading around 79.21. Its 50-day line is 78.58, so holding just above it. I think overall in retail, the number of stocks under pressure certainly outweigh the number of stocks with positive technical pictures. When we come back, we'll take a look at some damaged charts in retail today due to same-store sales numbers. We'll also take a look at some earnings reports that we saw earlier today. Some stocks that are acting well post-breakout. That's also important. I didn't mention my newsletter yet. Ultimate Growth Stocks recently launched at tfnn.com. You can go right on the home page in the newsletter tab. Just click on newsletters and investment newsletters, and you can get a 2-week trial to Ultimate Growth Stocks. We'll be right back.
Tiger University's Tiger Trading Tracks is your blueprint to building a solid foundation of comprehensive trading tools. An in-depth educational program, Tiger Trading Tracks features a step-by-step process for understanding the markets and creating success strategies for your trading. The Tiger Trading Track journey will prepare you to adapt and develop a personal trading and investing strategy that will perform best for you. While you can't control the markets you trade, a Tiger Trading Tracks education will allow you to understand your personal trading and investing needs and what markets are best suited for you. Now is the time for you to travel your path to financial independence. Follow your Tiger Trading Track to trading and investment success. Go to tigeruniversity.com and click on Tiger Trading Track in the navigation bar. Choose the course that most interests you and begin your education today.
Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of tfnn.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC. For some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Okay, welcome back to Breakout Investing with Ken Shreve. We have my good friend Joe on the line from Boston. Joe, how's it going today?
Good, how are you?
Oh, pretty good.
Good. I have a 2-part question for you.
All right.
I was looking at this. First of all, with your system, do you only buy companies that are making money, or if they have sales growth that qualifies? If they're still losing money but their sales growth is up?
Well, I mean, in isolated situations, Joe, I mean, there may be a situation where revenue growth is too strong to ignore. I would say, by and large, I do like to see annual earnings growth and profitability in recent quarters. It doesn't mean that I've never bought a company that's losing money, especially in the biotech sector is a good example. I mean, if there's a biotech that's posting losses, but the revenue growth is there, I may nibble every now and then, but that's probably the exception and not the rule. I typically like to see profitability.
Right. Okay. Because the one I gave you isn't making money, but I wanted to just see what you thought of this pattern here.
Yeah. So we're ticker LNG. That's I think Chenier or Chenier Energy. I'm not sure the pronunciation there, but this is a company that operates liquid natural gas, onshore liquefied natural gas receiving terminals, natural gas pipelines in the Gulf Coast of the United States. And yeah, like you said, I mean, if you look back at annual earnings, the company is not making money yet, but I mean, this is an example of technically a strong stock. So you've got a strong technical picture. I think the company had a secondary offering earlier this week, but during a time where a lot of stocks are breaking below support levels. I mean, LNG made a very strong move last week in volume. It's sitting right at its 10-day moving average right now, still holding well above its 20-day moving average at 928. So technically it looks quite strong. Not the type of stock that I would be looking at for my Ultimate Growth Stocks portfolio, again, because of the, it's just not making money yet. So good technicals, not sure about the fundamentals at this point.
Now, what's your experience with secondaries? If a company comes out with a secondary and it holds, is that positive?
I'd say generally generally it's a positive. The fact that they had a secondary, I think their secondary was actually oversubscribed, and there was good demand for it. So that's what you want to see. Typically, news of a share offering, all things being equal, is not going to be good for a stock. It typically goes down. There are dilution concerns. But if a secondary offering, if it's oversubscribed, I mean, there are some cases where you'll see a stock even trade higher on a secondary. 10-year energy did not trade higher, but I think it's holding in perfectly well. And like I said, its technical picture looks pretty strong right now.
Okay, I just wanted to get your opinion. I kind of brought it up before I looked at the numbers, and I was looking at the numbers, and I was like, oh, I know they're losing money. It's probably not something that. Yeah, I mean,
it does have good institutional sponsorship, which is important. So I mean, it's not like you can't find plenty of positives with this with this company. The one thing you're missing is sort of just a consistent track record of execution, earnings growth wise, and but you certainly have a lot of positives here as well. So hopefully it'll work out for you.
Not in it yet, but maybe it will. Okay, thanks, Ken.
Okay, all right, thanks, Joe.
Bye.
Bye. All right, that's Joe from Boston asking about 10-year energy, ticker LNG, on the American Stock Exchange. So taking a look at a couple of earnings reports today, I wanted to take a look at Cyberonics. This stock is getting hit pretty hard today. Stock that I'm familiar with, Cyberonics, shares were recently trading down about 12% or so to 28.49. Miss on the bottom line, miss on the top line. This is actually a former holding in my Ultimate Growth Stocks model portfolio, and I'm showing you a weekly chart. This is a stock that I actually owned back when it was in a strong uptrend and did pretty well with it. Recently took profits in Cyberonics several weeks ago when I saw it just felt like its technical picture was starting to deteriorate. But kind of a weaker earnings report today. The company's technology is very interesting. They make the vagus nerve stimulation system, which is an implantable medical device that's used to treat epilepsy and depression. So the earnings report was quite disappointing today. I still think there's a future for the company's technology, but again, disappointing earnings today from Cyberonics. Also wanted to take a look at United Natural Foods real quick. United Natural Foods here. And you see this stock is falling apart today. Shares recently trading around 41.66, below its 50-day moving average. Earnings up 7% year over year. Sales up 22% to $1.2 billion. Obviously, investors disappointed with the numbers. We'll be right back, folks.
Timing the Trade Charts is a complete charting software package that brings together all the tools that you need to analyze stocks using Tom O'Brien's Timing the Trade methodology in one easy-to-use application. For the low yearly rate of $449, Timing the Trade Charts automatically computes swing points, ABCs, Fibonacci retracement levels, confluence, gaps, and much more. Timing the Trade Charts is now available at tfnn.com, and you can download it and try it risk-free for 7 days. We're so confident that you'll love this new charting software package that we're offering a 30-day, no questions asked money-back guarantee. If you're not completely satisfied with this software, just let us know within 30 days and you'll get a complete refund. In order to take advantage of this great offer, log on to tfnn.com and click on the Timing the Trade Charts banner or call our office at 877-518-9190. That's 877-518-9190.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com.
Welcome back, folks, to Breakout Investing with Ken Shreve on TFNN. Also wanted to take a look at earnings from Joy Global today. Joy Global is one of the stars of the day during Thursday's session. This is a company that makes mining equipment used to extract minerals, coal, copper, iron ore. Very bullish earnings report earlier today. Earnings up 32% year over year, sales up 19%. To 1.06 billion. So it was actually an outstanding quarter from Joy Global. CEO Mike Sutherland was also just optimistic about the company's outlook. He said that customers continue to move forward with mine expansion plans based on the belief that capacity is going to have to increase significantly. So that's very good news for Joy Global. Shares were recently up 5.6% to $90.71. This is a stock that has been under pressure, but it is a good example of what a base building stock looks like. For my Ultimate Growth Stocks model portfolio, I really like to buy stocks when they are coming out of basing periods. In other words, a stock forms a base, it's consolidating gains, it goes on a lengthy uptrend, and then it pauses. Usually along with the broad market, it stops, pauses, digests its gains, forms a base. Joy Global is in that base building process right now. This is not a stock, even though it's up nicely today, it's not a stock that I would buy yet because for starters, if you look at its weekly chart, it's still trading below its 10-week moving average, which at one point was a support level. But it did show recently pretty good action at its 40-week moving average, which is a longer-term support level. And shares are recently trading around 90.75. It's a base building stock. If it can start to make a move towards its recent high of $95, $100 a share, this is a stock that would be a candidate for a good upside technical breakout. But I just like to see the stock base for a while longer. Again, it showed good support at its 40-week moving average, all the way down around 84.55. Recently trading around $90.75. So technically, it looks okay. Still needs to build its base more before I would consider entering this stock. So very nice numbers from Joy Global today, and we still have a few earnings reports next week that we'll go over in a little while. We're pretty much at the tail end of first quarter earnings season. At this point. So the story today, again, was mostly the retailers. The media are calling the numbers, the May same-store sales numbers, mostly disappointing today. I didn't think they were too bad, but the bottom line is that there are just a lot of charts in the retail sector that are just under pressure right now. The stocks look like they're getting on sale, but they're also, there's some institutional selling going on in the retail sector as well, which I think is worth paying attention to. I don't think we looked at a chart of Costco, but this is a stock that had good same-store sales numbers, up 13%. Stock was down 1.4% to 79.06. Still holding above its 50-day moving average, so you have to give it credit. But a lot of sellers in the stock today. Volume is picking up. It's trading near its session low. Costco's 50-day moving average is right around 78.50 or so, and again, shares recently trading around 79.06. So just barely above support. Take a look at another retailer. Actually, one of my favorite names, a company called Limited Brands. I thought I had a chart of it here, but let me pull up Limited. That's LTD on the New York Stock Exchange. Limited Brands has also been a tremendous price performer in the market, but shares taking a hit today. You can see down just over 2% to 37.90, up near its session high. So there are buyers that came in and lifted the stock off its intraday low of 36, but still below its 50-day moving average. A lot of these specialty retailers look like they're going to base for a little while. The strength in retail certainly, Saks, Tiffany, Coach, some of the luxury retailers out there continue to do pretty well. The market dished up a couple of breakouts last Tuesday. I'm going to talk about a couple that are still holding up pretty well. They're kind of an anomaly in the market right now, but we'll talk about those when we come back.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading in the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, as well as more than 35 different mining equities. For the low price of $150, you will receive 13 weeks of the Gold Report, or you can order up to a full year for under $500. If you'd like to find out more about the Gold Report, log on to tfnn.com, or for more information, call our office at 877-518-9190. That's 877-518-9190.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back, folks. Quick check on the market with about 20 minutes to go in Thursday's session. Sort of a wishy-washy day in the market, mixed performance at this point. The Dow is down 34 points, 0.3% to 12,256. The NASDAQ up close to 7 points, call it 0.25% to 2776, and the S&P 500 up a fraction to 1315 thereabouts. So it's really anyone's guess again how the market is going to react to tomorrow's jobs report. Certainly the consensus seems to be that there's going to be a disappointing jobs number tomorrow. Expectations right now, I believe, are in the area, again, I've seen anywhere from 140,000 up to 170,000. Goldman Sachs, again, just recently lowered their job growth forecast from 150,000 down to 100,000. We had a very disappointing ADP National Employment Report yesterday. That really doesn't have much. I haven't seen much correlation between that report and then what follows 2 days later in the jobs report. So I think there's a good chance the market could head lower on a disappointing number, and of course there's a chance if we see a number of 175 or 200,000 thereabouts, we could rip higher like we did on Tuesday. So because I just don't have a sense of which direction this market wants to go, I thought I had a sense on Tuesday when we got that mild follow-through day. I thought it could amount to something, but to see the spectacular reversals that took place in a lot of growth stocks yesterday after early strength, and just really the poor performance by the market yesterday, it just has kind of thrown things back into a kind of a confusing state where the direction of the market is tough to figure out right now. I do know that there's a lot of technical damage out there, and that's why I'm still being cautious on new buys. All right, let's take a look at some stocks that are doing pretty well today. I wanted to take a look at a specialty metals company called Carpenter Technologies. That's ticker CRS on the New York Stock Exchange. Shares were recently trading around 53.49, up about 5% or so. A lot of accumulation in this stock recently. It's an interesting company. It's a specialty metals firm. And looking at its weekly chart, you can see a good, powerful breakout recently over $43.47. It continues to trade very well post breakout. Again, this is kind of an anomaly in the market, but it broke out about 5 or 6 weeks ago, continues to hold nicely above its 10-week moving average. Shares recently trading around 53.78. It is an example of an extended stock. You'll hear me talk about extended stocks from time to time, and an extended stock is basically a stock that has moved too far past a proper buy point. You never want to, when you're buying breakout stocks, you never want to chase them too far past a proper buy point. I think CRS is extended right now, but its price strength in the market is worth noting. If we do get a market pullback, probably looking at this around $48 a share. That's where its 10-week moving average. If it truly is a strong stock, you'd expect it to find support down around $48 a share. Another interesting mover today, a company called Chart Industries. That's ticker GTLS on the NASDAQ. We'll take a look at Chart Industries. Shares were recently trading around 48.17, up about 2% or so. This is an interesting company. They make equipment used in the production, storage, and end use of hydrocarbon and industrial gases. So basically an equipment maker. This is another example of a base building stock. We talked about Joy Global, the strong earnings report from Joy Global earlier today. Base building stock. So is Chart Industries. So this is a stock that I would watch and see if it can complete its base. In order for it to complete its base, it's going to have to make a move towards $55 a share. It's currently around $48 a share, so it just needs to work on the right side of its base. It needs to start to retest its prior high, get above its 10-week moving average. I think it's probably too early with this one, again, because it is in the process of building a base. Another interesting breakout that we saw on Tuesday, there were a few breakouts on Tuesday when the NASDAQ rose 1.4% and a good push in trading volume. They weren't all over the place, but there were a few, and FEI Company was a stock that broke out on Tuesday. Looking at its weekly chart, you can see a really strong breakout 4 or 5 weeks ago, and then the stock extended gains earlier this week. It held on to all of its gains during its initial breakout, and then it popped into new high ground earlier this week. Shares of FEI were recently trading around 40.67. This is a company that makes electron microscopes and ion beam systems for research, semiconductor, and data storage markets. Good track record of growth at this company. Shares up 5.5%. This is a weekly chart. So for the week so far, it's up 5.5% to 40.68. Just today, it's up just over 1%. So another example of a chart that technically is doing nothing wrong. If you look at FEI Company, you look at Carpenter Technologies, healthy charts are not exactly a dime a dozen in the market right now. And you'll often hear me say that my stock screens tell me when to be aggressively buying stocks, and when I'm looking long and hard for buy candidates, it's usually just a pretty clear message the market is telling me, and that is to don't force the issue and mostly stay on the sidelines. So I'm going to nibble at breakouts here and there and see if they work, and if they don't work, because of the volatile nature of some of these stocks, I'm going to be more prone to cut losses short rather than potentially watch a small loss turn into a big loss. So that's FEI Company on the NASDAQ, ticker FEIC, another stock acting very well in this market. And we'll take a look at one more before we go to break here. This is a company based in Chile, and the name is a mouthful. It's called Sociedad Química y Minera, and it's basically a specialty chemicals fertilizer company. Good, strong breakout recently, continues to trade well. Shares were recently trading around 62.77, up nearly 3%. I like strength like this in the market. This is an interesting company. Good, solid base breakout recently, continues to trade well. This one still could see more upside. So Sociedad Química y Minera, a Chilean ADR, acting very well. All right, folks, we'll be right back.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments and Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing with Ken Shreve. Looks like late-breaking news here from Associated Press that Groupon has filed paperwork for its IPO. That looks like it's going to value the company at $750 million or so. That's not surprising to hear that Groupon is looks like they're poised to go public, especially after the success of the LinkedIn IPO. Wanted to take a look at a company set to report earnings next week, Ulta, salon cosmetics and fragrance. This has been a really strong performing retailer, but again, this chart is very similar to a lot of charts that I'm seeing right now in the specialty retail space. Shares of Ulta were down about 6.5% today. Pretty heavy volume to around 50.62. The stock is undercut its 50-day moving average. Again, Ulta is scheduled to report earnings next week. Quick check on the markets with about 5 minutes to go in the trading session. Looks like we're weakening into the close here a little bit. The Dow now down 42 points, 0.3% to 12,248. NASDAQ getting close to break even, only up 2 points. 0.1% to 2771, and the S&P 500 down 2.25 points or so, 0.2% to 1312. So just kind of a lackluster performance today ahead of the jobs number tomorrow. Hopefully we see a good number. Hopefully we see Wall Street cheer the results, and we can keep this uptrend going. Again, I thought an uptrend was taking shape on Tuesday, but that all went out the window Wednesday when we saw that nasty sell-off and really just poor action by the market yesterday. So all eyes will be on the jobs report tomorrow. Coming up after the close today, we've got earnings from Diamond Foods, ticker DMND on the NASDAQ. Let's see if I have a chart here for Diamond Foods. See, shares were under a little bit of pressure ahead of the report, down close to 2% to 71.27. As you can see, the stock is working on a 3-session losing streak. Has been a very, very strong performer, still holding well above its 50-day moving average at 63.77, but selling pressure starting to build in the stock ahead of its earnings report after the close. The estimate is for profit of 48 cents a share. That's up 60% year over year, with sales up 56% to $216.6 million. This is a very well-run company, good solid stock, but again, a stock that has been running higher for several weeks. So the question is, has a lot of good news already been priced in here? Diamond Foods coming out after the close. And also Verifone. This is another interesting company, a provider of electronic payment solutions. Pull up a chart of Verifone here. Verifone has, at one point, a very strong performer. You can see the stock has come under quite a bit of selling pressure in recent weeks. It's below its 50-day moving average. Shares were recently trading 1.5% higher to 47.09. So this could be the opposite of Diamond Foods. I mean, expectations obviously aren't high, judging by its recent price performance. At Verifone, the estimate here is for a profit of 43 cents a share, up 48% from a year ago, with sales up 19% to $285.4 million. So watch earnings from Verifone after the close. And again, the jobs report tomorrow. Expectations, job growth anywhere 140,000, 150, 170,000, somewhere in that area. The economy created 244,000 jobs in April. A lot of pessimism, judging by the market's reaction yesterday, the poor performance after the follow-through day on Tuesday. So we'll see how the market reacts, and hopefully we'll see some buyers come into the market. Nothing would surprise me at this point. So that's where we're at. Dow is down about 43.5 points, 0.4% to 12,246. Hope you have a great day tomorrow. The next edition of Breakout Investing with Ken Shreve will be Tuesday, 3 to 4 p.m. Eastern. Don't forget to check